and welcome. This is Business Edge right here on News Central. I'm Tolulope. Adeleru-Balogun. First, the headlines. The Central Bank of Nigeria directs banks to close international monetary transfer operators' proceeds. And staying in Nigeria, Forex liquidity presents risk to Nigerian banks' ratings, and this is according to Fitch. When we wrap things up, we'll be doing that with NT4 to watch. But of course, as always, you're welcome. This is Business Edge. Now let's get straight into our very first story. Another development has occurred in Nigeria's banking industry, and it has the Central Bank of Nigeria directing all banks to close all naira ledger accounts opened for receiving international monetary transfer operators' proceeds. The central bank, in a circular jointly signed by its Director Banking Supervision, Dr. Bello Hassan, and the Director Trade and Exchange Department, Dr. Ozenema Naji, demanded an immediate compliance with the directive. The letter, addressed to all managing directors of deposit money banks, was titled "Regarding Amendment to Procedures for Receipt of Diaspora Remittances." It said, following our circular of November 30th, 2020, regarding operations of diaspora remittances, all banks are hereby directed to close all naira ledger accounts opened specifically for the purpose of receiving IMTO proceeds with immediate effect. In addition, please note that IMTO beneficiaries or recipients are to receive their proceeds in foreign currency, that's most likely USD, or have it deposited in their domiciliary account in a Nigerian bank. It is at the sole discretion of the recipient to either choose foreign currency cash or have the proceeds deposited into their domiciliary accounts in Nigeria. Please confirm compliance with this directive to the CBN by close of business today, and that was, of course, December 2nd, 2020. Now, also, the central bank, in a separate circular, clarified its new rule on receipts of Forex inflows from diaspora remittances. It said, "We wish to reiterate and clarify to all IMTOs the following. IMTOs must ensure that all funds in favor of beneficiaries or recipients in Nigeria be deposited into the agent bank's correspondent account. Agent banks, aka deposit money banks in Nigeria, will be responsible for all payments to beneficiaries or recipients either in foreign currency cash or into the beneficiary's recipient's domiciliary account in Nigeria. The mode, if payment either in cash or transfer, is at the sole discretion of the beneficiaries or recipients. Please ensure strict compliance and be guided accordingly." These policies came less than 24 hours after the CBN introduced special bills to support economic recovery and deepen the financial market. Now, to make sense of all of this and break it down into easy to understand information, I have financial analyst and the founder of Awabah, Tunji Andrews, joining me. Tunji, how are you today? Okay, can you check your audio? We seem to be having some audio issues there. Just check that you are not muted so we can make sure we have a great. There we go. Tunji, so I read this whole letter, not the whole letter anyway, but the circular coming from the CBN. And to the non-initiated, this is a lot of English to say what? What exactly is the Central Bank of Nigeria saying right now?
So the CBN is concerned with liquidity in the market. They are concerned with the fact that there isn't enough dollars going around in the local market. What has happened is that quite a few people have dollars and they are just stacking it up in their respective accounts. And it creates a sense of scarcity, because we all did see that in the black market, the dollar rate went to about 500 recently.
Yeah.
And it's not generally because there are no dollars in the system. It's just because nobody is willing to let go of their dollars at this particular time. So all of this is geared towards trying to make, the CBN is trying to make sure that, people who have those dollar holdings tend to be able to get it back into the system. So the general context is, if I cannot do the transaction with you and then have me pay into your IMTO account as naira, then it becomes a problem. So you can't hold dollars. You have to let go of the dollars into the market or find another way. And also, if you remember, a couple of days ago, the CBN released a circular saying that people who had foreign remittances could do as they pleased if they wanted to go anywhere to change it. So the general context is the CBN is trying to force the dollars, which are in bank holdings, back into the system. And this will work in the midterm. I'm already hearing about people who are finding loopholes about how they can work around it using other instruments, but it will work in the short term.
So it's interesting that we talk about this because just a few short months ago, even though it didn't seem to be a circular from the CBN, there were actions from some banks actually barring Nigerians who were holding foreign currency in terms of, how they were accessing that foreign currency, how they were able to remove that foreign currency. And that caused a big scuffle just a few months ago. And now we're seeing what looks to be a policy reversal. And a lot of people have really castigated the CBN in terms of multiple windows for the dollar, multiple exchange rates as well. Now we're seeing this and it's more a reaction, but there are people who have been saying some of this should have been done earlier. What do we say about that in terms of the CBN now doing this versus when certain things regarding this should have been done and how the flip-flop might also affect some confidence in their policy and, of course, their leadership?
So the CBN it's in their purview and in their rights to react to things that are happening on the ground. The only challenge is that some of these things could be predicted. The reason why people are holding dollars is simple. If you look at most of the naira assets on ground right now, many of them are not yielding properly. If you put your money into a bank account, so somebody was telling me about fixed deposit, that it was like the interest on it is like less than 1%. So that there really isn't any instrument for people to put their money into right now. So if you talk to the average person who is not very vast in investment, they tell you that, just keep your money in dollars. There might be a devaluation. Even if there's no devaluation, at least that keeps the store of your cash. So that is the mindset of a lot of people that are holding dollars. So whether you do this or not, the fact is that, people who hold dollars will still hold dollars. There's a significant infrastructure a significant imbalance as concerns the way the economy is right now. The CBN is trying to force lending, is trying to reduce interest rates to make sure that people go out and spend money. But you see, it's just like if you tell me that there's a party in the third compound for my house, but there's a lion in the next compound. Even if the party is really, bumping and everything, I'm not going to go past that lion. So that is the problem with the Nigerian economy. There are still significant flaws in the economy that we refuse to address. And then we keep doing things like this. So there will be another flip-flop in the future because where they are trying to go is not in this direction, but this is a needed move to try and create liquidity in the economy so that we don't go to 600 naira because of artificial scarcity.
But is it really artificial? So we've seen rising dollar demand that has put pressure on the naira. We've seen importers who have obligations. They've been scrambling for hard currency because they have business. They need to do business. They need to keep their businesses going. We've also seen those who provide foreign exchange. Some of them, particularly offshore investors, they've sort of exited since we've had the oil price come down because of COVID-19. So can we really say this is artificial? Can we really say this is even just temporary? And beyond that, what do we need the CBN to do? We've seen that the naira has weakened sharply just this past month alone, and that's on the black market. On Monday, it traded at a 3.5-year low, and that was 500 naira to the dollar. You mentioned that earlier, widening the premium between the official market rate, where the currency was stuck at 381 rather since July. So we have the official, we have the black markets, we have 500, we have 381. There just is too much of a gap between what is official and what is actual. And then, of course, the leadership. Again, it comes back to the leadership and the policy from the CBN. What does the CBN need to do?
So, the CBN has relied on dollar income from crude oil for the last how many years. It has not built a structure that allows dollars to come in and go out. If you know that your economy depends on it, there has to be a system that the dollars continue to go in and go out in a very seamless manner. What is happening is that very few people are having the opportunity to be able to exit their dollars. Now, while you may think that what you're doing by restricting them from taking out their money is you keeping the money in the system, what it also inevitably does is that it tells people who are ready to bring in their money that, oh, those guys are trapped there, don't take your money in. So what you do is, it's just like a tap. If the tap is flowing this way and you put a stop here, the water here will remain, but the water here also will not come in. So it's a simple system, and the CBN is not thinking from that perspective. You want a system. So former CBN Governor Sanusi had a system, I think it was an RDAS or the WDAS, I can't remember which one it was, but it was a general system where everybody felt they were comfortable to bring in their dollars, and whenever they wanted to take it out, it needed paperwork, but they will take out their dollars. So it gave confidence. And really, it's not really about the fact that people can't leave their dollars in Nigeria. They just want to know that whenever I need it, I can take it out, because I might need it when I'm really pressed. So if I feel that there is something stopping me from taking it out, even if I don't need it outside, I will start trying to take it out because I don't know when I'm going to need it outside. So those are some of the thoughts that the CBN needs to have. It needs to create a system whereby a foreign portfolio investment keeps rolling in, foreign direct investment keeps rolling in, and it keeps, if it wants to go out, it can go out whenever it needs to, so that we don't depend on crude oil. Whenever the crude oil prices go down, CBN doesn't have money. Whenever crude oil prices go up, CBN floods the market as it normally says. So it's a system whereby you have to let the market, be the market and stop trying to, force the hands of everybody. Because right now, that's what the CBN is doing, playing judge, jury, and executioner. And it's not allowing the market to do any part in it. And markets don't like that.
Okay, and quickly talking about markets as we wrap up on this, what about the BDCs, the Bureau d'Echanges? Some are saying that they seem to be a target of this new directive. What's your thoughts on that? Are they at any risk here? Do they need some help? Recapitalization? Is this about them? What do you think?
I don't think there's any serious risk to anybody. The CBN knows who it's targeting, and the CBN has targeted them. CBN can see from the dashboard who is holding dollars and who is holding the largest stash of dollars. And the CBN they're always very direct in their circulars. And when I mean direct, is like there's no hidden game. Okay. If the IMTOs they are going for, they know the IMTOs are holding dollars, so they've gone for the IMTOs. If it was anybody else, they would have gone for those people. So it's the IMTOs that we're focusing on right now. Maybe tomorrow we'll be focusing on you and I. Who knows? But right now it's the IMTOs that have the problem.
Okay, so Tunji, let's pause here. We're going to take a break and continue the conversation, but just for people's information, because it's really quite interesting when you look at this conversation around dollars being held in Nigeria. Now, Nigeria is the world's 5th biggest destination for international remittances, with an estimated 5 million Nigerians living outside the shores of the country who send money back to their relatives. PricewaterhouseCoopers estimated that diaspora inflows into Nigeria totaled $23.63 billion in 2018, representing 6.1% of the country's GDP. That definitely is something no one wants to lose a handle on. We're going to continue our conversation into Nigerian financial news. And when we come back, it's about Forex liquidity and possibly presenting risk to Nigeria's bank ratings. We'll get into that conversation, and Tunji Andrews will still be with us right after this. Now, Fitch Ratings says that foreign currency liquidity presents a significant risk to Nigerian banks' ratings. The international rating organization said this in a report titled Fitch Ratings sees gradual recovery for African banks in 2021. Part of the report reads that foreign currency liquidity risks have not materialized, particularly in Nigeria, but present a significant risk to banks' ratings. The report said funding and liquidity would remain broadly stable for African banks. It noted that banks were generally more liquid due to slower loan growth and risk aversion, and deposit growth would remain strong. The report said the sector outlook for African banks was stable for 2021 as it saw a gradual normalization with business volumes and revenues picking up. The report said, however, we do not expect a return to pre-pandemic performance levels for at least another 2 years. According to the report, asset quality will deteriorate faster in 2021 and beyond due to the lag effect of the pandemic on households and businesses, combined with the expiry of temporary debt relief measures. Fitch Ratings said that the most likely scenario is the active restructuring of large corporate loans, preventing a sharper hike in impaired loans. Such flexibility will not be afforded to consumer and SME loans, and these segments will drive higher impaired loans over the longer term. Impaired loan ratios could head towards low double digits in some countries, particularly in Nigeria and Morocco. Our base case is that due to still healthy revenue generation capability, most banks in the region will remain profitable despite large credit losses. The rebuilding of earnings will be slower for South African banks. And we still have, of course, Tunji Andrew with us to get into this. So, Tunji, coming from the conversation we just had about what the CBN is doing in terms of trying to bring in more remittances, and now Fitch is saying that Forex liquidity could present a risk to Nigerian banks and their ratings. Where do the two meet? Where is the meeting point between this conversation, between these two headline stories?
So there is, remember, earlier we talked about the fact that the CBN cannot continue to be the main source,
yes,
and the only source of FX in the country, because and this is why liquidity is always good, because liquidity is like an engine. You know, if an engine is well oiled, it works really well, and if it is well oiled, and you want to look at it from local liquidity, from the perspective of the oiling. If there's oiling in the system, more will come in. If there's dryness in the system, more will stay away. So what Fitch is really talking about is that if there is a sense that there is a scarcity of liquidity on the ground, more money will stay away. It's just simple logic. You know, nobody is going to take their money to where there's any thought of there might be a problem in that particular place. So the CBN needs to, as urgently as possible, fix the liquidity problem on ground, or you will continue to see that more money will continue to go away. And do not forget, a lot of these foreign portfolio investors are in our debt market. They're the ones that buy most of those government bonds you hear about and things like that. They're in our stock exchange also. They're the one buying they own about 50% of the stocks on a Nigerian stock exchange. So if that money is not coming in, it is a problem scenario for the CBN, a problem scenario for the federal government, because we need that money for a lot of things. We need that money to keep going. We need that money for industries to continue to go. And there's a small multiplier effect for the small guys. So someone like me now, I need to go and buy goods for Christmas, to come and sell stuff for Christmas in the country. I might not be as big as Dangote and the rest, but what those guys do affects me on a small scale. So if I'm not able to get FX, I can't go out and buy. And if I have to get it at an expensive rate, I will go out, buy stuff, and sell at a more expensive rate in Nigeria. So it does the multiplier effect. It just makes your economy weaker on the longer term. So the CBN, like I keep saying, needs to urgently fix the liquidity problem within the economy.
So when we're looking at this, with the new remittance rule from the CBN that has taken immediate effect, will that not put banks more at risk? Because it is the banks that are expected to handle this foreign remittances coming in.
Well, not really. Well, not really. Fitch is also talking about banks and their offshore loans. So some of them have loans outside the country. which will be paid in foreign exchange. I want you to take your mind back to the issues with Etisalat. If we can remember, there was a time when Etisalat could not pay a loan. It was owing, not because it didn't want to pay, but because it was in FX, and we had moved from the price at the time to another price, from the naira to the dollar. And of course, even at the rate of moving from one price to another, they couldn't even get the dollars to pay as at when they were supposed to pay.
Okay.
So there were penalties and there were all sorts of things. And Etisalat was like, you know what, we're out. Banks may face that, and they faced that in 2016 too, where they wanted to pay their offshore loans, but they couldn't pay the offshore loans because they just couldn't buy dollars on ground. And we might be coming to that place again. So the banks are excited. I wouldn't say excited, but they are backing this because they need FX on the ground. They can't take dollars from their clients' accounts and pay their obligations because it's their clients' money, you know, but they need the FX to go around so that they could also buy too. So it's a situation where this move is not, it's not just the CBN alone. If my sources say right, there are people on the ground who also advised this, you know, that this is the way to go, and we think this will do the economy good. So everybody's backing this. Everybody's backing this and hoping that the results will be what they all expected.
So what happens to the naira with the possibility of an inflow, much more of foreign currencies? Where do we put the naira, given what we know and what Nigerians are feeling? Inflation at multi-year high. So where do we put the naira and the risk that some of this might pose to the naira?
Voila for who get naira. So the problem is the naira is facing multiple, it's like a witch's brew right now for the naira.
Yeah.
There's a recession. There's high inflation. It's likely to go higher. And there's FX challenges. So altogether, it's just everything that could go wrong for the naira right now is going wrong. Domestic production isn't at a good place. So everything that could go wrong for the naira is going wrong right now. And unfortunately, we're not even having a conversation about the naira.
Yeah.
You know, we're in Nigeria, but we're having a conversation about dollars.
About the dollar.
It's very funny.
Yeah.
It's the naira is the forgotten child, so to say. But you see, and this is the point I was trying to make earlier. If you do not fix the imbalances in your economy as a structure, you will always come back to this conversation. And nobody wants to hold the naira right now. Not because they don't like the naira, but one, if I hold the naira, where do I put it? Do I put it in a bank account or a savings account? Because if I put it in a savings account, I'm losing money because inflation is at 14%. Interest rate is at 1%. I'm losing 13% every year by putting my money in a savings account. Where do I put it? Do I put it in government bonds? Government bonds are giving me 5%, 6%. Inflation is 14%. I'm losing money. Where do I put my naira? It doesn't make sense to hold naira right now. So that's the problem with the naira.
I feel like if I let you go on, you're going to give me a long list that might just roll down as to why we are having so many issues with the naira. But I do believe you said something really important, that no one is talking about the naira. Our focus, unfortunately, as it is, because it is business, it ends up being about the dollar and how that is affecting trade and business. But Tunji, thank you so much for joining us. We'll keep our eye on this as it plays out. I know that there's a lot more conversation, especially as determined by the policy statement and the stand of the CBN. So we'll be having conversations about that. Thank you again so much for joining us on Business Edge. All right, let's move straight.
Thanks for having me.
Let's move straight into NC4 to watch. We start in South Africa, where the country gives national carrier $98 million. The South African Airways Administration has announced that the government has transferred 1.5 billion rand, about $98 million, to administrators for national airline South African Airways, but the funds cannot be used just yet. Then staying in the southern part of the continent, Botswana to slowly reopen borders in efforts to restart tourism. Botswana's president recently expressed hope that the reopening of the southern African country's borders to international travelers will revitalize its tourism industry. Now to North Africa, where Egypt's poverty rate decreases for the first time in 20 years. The Central Agency for Public Mobilization and Statistics revealed that Egypt's poverty rate declined for the first time since fiscal year 1999. The latest figures released by the agency said the country's poverty rate declined by 29.7% compared to 32.5% in the study of income and spending for financial year 2017 and 18. And finally, Seychelles loses $35 million in uncollected revenues. And this is according to a new report from the Auditor General Gamini Harath. Harath said at the launch of the 2019 report that the money which was not collected by the Seychelles Revenue Commission and other sums due to the government by 5 other state bodies will likely not be collected due to the passage of time. And that's it on this edition of Business Edge. As always, thank you so much for joining us. Head to our website and, of course, follow us on our social media platforms for more business and financial stories from across the continent. This is how we say have a great weekend, and I'll see you on Monday. I'm Tolulope, Adeleru-Balogun.